OPEC Plus surprised markets over the weekend, agreeing to cut production by a little over 1 million barrels a day. Now, this comes on top of previous production cuts, most notably the 2 million barrel a day production cut that was announced towards the back end of last year, and really emphasizes that it will not stand by, regardless of how unclear the outlook is for the global economy, and see lower oil prices amidst a potential downside for demand and obviously a downside for the global economy as well. What's most interesting about this is the timing, really, of the announcement. The reason why I think markets were not expecting an output cut to be announced this month is quite simply the fact that the outlook is so unclear. We still don't know what the full ramifications of the mini banking crisis are going to be over the course of the rest of the year. But it seems like OPEC Plus has decided to take a more defensive approach on this. Now, you can see in certain segments of the markets that people are a little bit more pessimistic on the economy now, even anticipating a recession. And the most obvious part of this is US Treasury yields, which have remained not too far from the low levels that they were seen at during the turmoil in the banking market. And also, you can see from interest rate expectations on the back of that far fewer rate hikes are now priced in, and actually rate cuts are priced in instead. So there clearly is a segment of the market that does anticipate much lower growth. The surprising factor of this is that because it's a moving, evolving situation, that I think people were thinking that OPEC Plus may hold off before making such a judgment, but they haven't. They've come out, they've made a very significant move, and that's caught the markets off guard and caused a jolt in the price at the start of the week. Now, prices are trading up around 5% at this point in time. We'll wait and see when the dust settles as to what the longer term implications are going to be. But I think that move that we saw at the start of the week just highlights how surprised investors were. One other thing that we should note is that OPEC Plus came under fierce criticism in the final months of last year because of its decision to cut output by 2 million barrels a day. And the reality of the situation is that the slower growth meant that lower output was potentially needed, and prices didn't balloon in a way that many feared when they announced that cut. There was a lot of talk about $100 oil when that cut was announced. It never materialized. In fact, it actually traded around $70 for quite a lot of the period that's followed since then. So we shouldn't forget the fact that while the decision may come under fierce opposition at this point in time, and for obvious reasons, higher oil prices is not something we need at this point, and we all know the inflationary impact that higher oil prices have had, but oil-producing nations have their own motives and their own reasons for needing higher prices, and it may simply be the case that they've anticipated the downfall in growth over the course of the rest of the year, and therefore demand, and are simply adjusting supply to meet that. There's obviously other explanations that it could potentially be, and there's going to be a lot of speculation now over the coming days and weeks, but it is worth noting that after their previous decision, we didn't see that huge spike in prices that many feared we would see. Talking of prices, let's take a look at the chart. And as you can see, we've got a WTI chart here. You can see the spike that we've seen over the course of trading so far today. The price actually rallied in the lead up to this as well. This was not on the expectation of any moves here from OPEC Plus. This was more a reflection of markets calming down in the aftermath of the banking mini crisis that we saw. So that helped to spur prices higher. But what we've now seen is prices move back towards the upper end of that trading range that we saw WTI trading in from early December through to that mini banking crisis kicking off last month. And this now leaves us at an interesting point. The question now is, has this move by OPEC Plus simply moved us back into a previous trading range where OPEC Plus was seemingly quite happy, quite satisfied? Or is this going to be the catalyst for a move through $81, $82 a barrel, take us through that trading range back into levels not seen since last autumn, going into winter around September through November time, and into that $81, $82 to $92 range? It's also worth noting from a technical perspective that we have finally broken through the 55, 89 day simple moving average band. We saw a couple of potential breakouts in November and again in early March, but we really didn't hover above here for very long before price moved back below. There's been plenty of tests apart from that where we have seen the price fail. This is a very clear-cut break, it seems, at this point, and driven by strong fundamentals. The question now is, how will the 200, 233 day hold up if we do see a break of that resistance around just shy of 82? where you can see price struggle to move above at any point really from mid-November onwards. That's going to be the crucial part, I think, for me. That break of 82 could be a really bullish signal and could potentially put that 233-day simple moving average band under severe pressure. That said, if people do view that the economy is going to slow as a result of what we've seen in recent months, and if people do think that higher interest rates are going to bite and are going to have a detrimental impact on the economy and therefore demand, we could simply see crude oil prices settle back in the range they were trading at from November through to March, because of the uncertainty that still exists. Again, this is a very fluid situation. I think there's plenty more twists and turns to come, but we could potentially see oil prices just potentially sit back into that trading range. And what OPEC Plus may have ultimately done is just give it that little bit of nudge that that was needed in order to try and push that price to a more sustainable level. That's a lot of ifs, buts, and maybes, but this is, like I say, a very fluid situation, a very uncertain market, and we're seeing that reflected no better than in WTI crude.